The company being analyzed today is Sky Gold and Diamonds Limited. This company manufactures and sells jewelry and has seen massive growth in the past and is projecting to see continued massive growth in the future. So today we're going to analyze the company's financials, its clients, what it actually does, and its future growth plans, plus how is the industry looking to grow like. Let us start. So first, market cap of 5,117 crores. So pretty mid-cap-ish company. Current price of one share 330 rupees. Book value means assets minus liabilities. So book value per share 66.9 rupees. Return on equity ROE 25.5%. Nice. Return on capital employed 21.2%. Nice. Stock price to earnings ratio 27.6, which is pretty good. Now let us go to the financials. Okay. We got financials from 2021 all the way to fiscal year 2025. First, revenue. You can see revenue from operations, all these numbers and crores, 45.3% is a CAGR, compounded growth rate in revenue, from 796 crores in fiscal year 2021, slight dip next year, 1154 crores, then 1700 crores, and finally 3548 crores in fiscal year 2025. Massive growth. You can see EBITDA 107.7% growth in EBITDA, CAGR, compounded growth, meaning EBITDA margins have actually grown. The company has grown even more profitable, with profits growing faster than revenue. 11 crores in fiscal year 2021. Despite revenue dipping, EBITDA increased to 20 crores, and finally, currently 196 crores in fiscal year 2025. Massive growth, way better margins than before, it seems. And net profit after tax grew by 129% CAGR, which is massive, from 5 crores in fiscal year 2021 to 133 crores in fiscal year 2025. I'm sorry if the quality is a bit, you know, it's a bit bad to showcase the entire thing. I did not zoom in. Then the current ratio, current assets divided by current liabilities. Is it good if it's below 1? It depends on industry, but it seems to be on a bit of a high trend, 1.7. This is important. The interest coverage ratio. This line is the interest coverage ratio. EBITDA divided by the interest payments is the interest coverage ratio. If it's less than 1 for any industry, that's concerning, but looks like it was 3.3 times interest coverage ratio few years back, couple years back, 4.9 times for fiscal year 2025. That seems that on the surface it's all good. The debt to equity ratio is this one. Again, it's a bit, these blocks bit unclear. zero point 0.9 and on a bit of a decline. So zero point 0.9 times was debt to equity. Okay. Return ratios, return on capital employed, you can see they're high and have been pretty high historically speaking. 21% fiscal year 2025. Return on equity, return on capital employed is above line. Let me just go here. Yes, 30% in fiscal year 2025. It dipped down last few years, but this year was a rise. Let's see if they can keep this up in the future. So we looked at the financials. Now, what does the company do? What is its history? Sky Golds and Diamonds, established in 2008. All right. Its manufacturing capacity is 14.4 tons per year. Okay. Both international and Indian, it has business in 2,000 retail outlets across India and 500 outlets globally. Now, it sells jewelry directly to customers, plus it also sells jewelry to other companies. So it's a B2B company, also and a B2C company. So it does both. So very important, 14.4 tons per annum is the capacity, and 2,000 outlets overall, 5,000 are globally. Then we move on. Yes, comparative advantages of the company. Some comparative advantages. First is lead time. From design to finished products in only 7 to 20 days. So the company does everything from the designing of the product to manufacturing the product and even I think packaging. They can handle this everything from 7 to 20 days. So that's very impressive. A scale of operation, leading single location manufacturer in India. Leading single location. So one location, when compared to other companies, if they have like one location, it seems to be having one of the largest single location. gold manufacturing or jewelry manufacturing facilities in India, it seems like they're saying. And it offers around 9 lakh plus unique designs in our catalog. Wait, 9 lakh unique design. That's a lot. And tech focused manufacturing. So you can see the latest technology they're trying to get. 9 lakhs is a designs a lot, huh? Then who are the clients of the company? Company has got some massive clients, okay? We can actually zoom in a bit. We got Kalyan. Oh, sorry. Yeah, we got Kalyan, we got Malabar, we got Carrot Lane for the domestic clients. We got Reliance Jewels. We even got like Senko Gold, all right? Some of the clients, international clients, again, we got Kalyan, we got Wish Gold, who's that? We got Malabar. So you can see international clients and domestic clients both are there. Let us just zoom back a bit. Yeah, there. Now we're going to focus on future outlook and clients and all that. All right. So in order to do that, first let us go here. Now, in quarter two fiscal year 2026, you can see the results. How much revenue was it? Oh my God, 1500 crores, 1484 crores of revenue in quarter two alone. Quarter two alone. 99 crores EBITDA, 867 crores profit after tax. You can see the massive growth rates. 157% growth in EBITDA, only 82% growth in profit after tax. So interest costs and taxes must have risen a lot. 93% growth in revenue this quarter alone. Latest quarter, this is latest quarter. Latest quarter, 10% of revenue came from exports. And I have my notes here. They want exports to reach 10 to 12% of revenue next quarter, that is quarter three, and 15 to 20% of revenue by 2027 March. One second. 15 to 20% of revenue by this March 2027. And these are the volumes that's actually selling. So 544 kgs in quarter two fiscal year 2026, 456 in quarter one. So these are the normal volumes it's selling. 14.4 tons per annum, which is 14,400 kgs per year. It's currently selling this much per month. So not a lot of the capacity is actually getting utilized right now. That is the important thing. Then, yes, outlook. What is the future outlook and guidance given by the company? So what is the vision? Now remember, the revenue was 3,500-ish crores. They want this to go to 7,600 crores by fiscal year 2027. 7,600. Capacity utilization, we saw that was like 500 something kgs per month, 900 kgs per month capacity utilization. They want a profit after tax margin to reach 4.25 to 4.5% fiscal year 2027, and they want the return on capital employed to be more than 25%. So these are straight up numbers, very clear numbers they have given. Okay, hold up. Yes, clear numbers they have given. Now, what about next year? Even next year they have given. So revenues, they're expecting reaching 5,400 crores in fiscal year 2026 alone and 7,600 crores by fiscal year 2027. They're going to be expanding the product portfolio. They're going to be looking for acquisitions. They're going to be looking for geographic expansion and operational efficiency to reach that higher return on capital employed and higher EBITDA margin. EBITDA margin. Then market outlook. What is the market looking like? So the Indian domestic jewelry market, this is just a projection. This is not what it's going to be. It's just a projection. It's expected to reach, well, let me just zoom in a bit. Expected to reach 145 billion by fiscal year 2028, growing at a 16% CAGR between 2023 and 2028. You can see till 2020 it looks like, in a rise, 48 billion and 60 billion. And COVID came, and since then you can see there's been a big growth, big growth. Okay, and where is this expected to grow? You can see bridal wear, daily wear, and fashion. Bridal wear 55% in fiscal year 2024. Okay, so bridal wear seems to be the big thing. All right, then we go to here. Now, in addition to this already expected fast growth segment, the organized players are expected to grow even faster. As you can see, it is expected that organized players get around 43% of total market share, retail jewelry market share by fiscal year 2028, 43%. Fiscal year 2024 was 38%. You can see in fiscal year 2021 was 90%. So you can see the share of organized players is increasing, expected to increase further. So this they they are expanding their market share, meaning they're going to be growing faster than the overall market. So that's 16% expected. More than that is what the average industry is expected to grow at. Sorry, the organized segment is expected to grow at on average. And finally, some very important things. One is this: they have given their overall market share. So the organized jewelry retail market, Sky Gold has currently a 0.5% market share, less than 0.5% market share. So a lot of room to grow. You can take it as two ways. One, it is very small, but second, on a positive one, a lot of room to grow. Then, the gross profit margins improved from 3% in fiscal year 2020 to 7% plus currently, driven by scale, design premiums, and lower gold loss. Further expansion expected through diamond sales and advanced golds. So we can take it as at least they have one history. They have a history of improving the margins. In last 5 years, they've improved it more than doubled, 3% to 7% plus, and they're expecting it to grow to diamond sales and advanced gold. Then two times growth achieved, revenue growth achieved last few years, and they're gearing to repeat that. Then this is important. Remember the current capacity of 14.4 tons? Their proposed scale up to 4.5 tons capacity is a strategic priority. 4.5 tons is the expansion they're looking at now. I've written in my notes, if I'm correct, I could be wrong. If I'm correct, this 4.5 tons is per month. They are looking for a new 54 tons per annum facility, 54 tons per annum facility, operational around 2028. Okay, operational around 2028. Yes. Also, they are 100% positive. They're very positive that the company will be cash flow positive in March 2027. So by March 2027, they're expecting the company to be cash flow positive. Okay, I've written this all down. I should have shown the con call. That's my fault. So currently 14.4 tons, we saw it was selling around 500 to 600 kgs per month, which translates to around only 5 to 7 tons per year. Like 7, 8 tons per year utilization is actually happening of the 14.4. So by fiscal year 2027, they want to do 900 kgs per month, which is around 10.8 tons per annum per year production. So they, are, they want to increase the capacity utilization a lot. From current utilization, they want to increase the current capacity utilization. So assuming everything goes right, by 2027 they achieve 900 kgs per month capacity utilization. Then they will expand this total capacity by another 54 tons and then expand on the new capacity. Okay. And expecting cash flow positive by by March 2027. They're very confident in that. Fine, fine, fine. So this was it. That was Sky Gold Limited, growing very, very fast and is expecting to grow very, very fast even in the future. It's expecting. Let us see if Sky Gold can achieve that